Dr. Mooney, my economics professor, was wrong. Supply and demand, you think prices come down, supply comes down. It does eventually, but if you've got so much debt, let's say you have two oil companies, one has no debt, one has a lot of debt. Oil prices come down, the one with no debt can reduce production. The one with debt actually has to increase production. So if oil goes from 100 a barrel to 50, a highly leveraged firm has to produce twice as much oil. So
because they've got to make their debt payment.
They've got to make their debt
Even
payments.
if they're losing money, and by the way, we've covered many companies like this, and some of them are still around, some have gone away. They got to make their debt payments. Even if they're losing money on every barrel, they need the cash flow.
They got to pump and pray. They have to, got to get the cash, got to pay the debt. So interestingly, in 14, 15, oil was down over 50%. Production was up over 25. Same thing now. Oil's down a third, production's up. So you think the production's coming down, but the debt is really what's
I've got a terrifying number. Are you ready for you, Kevin? I mean, it's Friday morning, it's early. $240 billion. According to S&P Global, $240 billion is the amount of global energy, oil and gas related debt that is maturing in the next 5 years around the world. So it's not just American shale companies. The global debt load is high.
Right.
Saudi Arabia needs $88 a barrel to break even on their budget. They're not going to get it, are they?
And we've got Texas fields that are profitable at $30 or $35 a barrel.
Yeah, but a lot of debt there, too, where they've got to keep the production going. Right. I don't know if you think we're going to get back to 80. I can't see higher prices anytime soon.
We've got 70 for this later this year.
But 80, that seems optimistic.
I think it is optimistic, and I think overall we're a little bit more optimistic on the economy than most other folks, and we think the stimulus in China is starting to work. We're seeing it in soybean prices and copper prices, and we think that's a good sign for oil.
The positive sign for oil is that a lot of that debt has been refinanced. It's been stretched out. Right. A lot of it is coming due, I said, in the next 5 years, but most of that is back-end loaded, 2022, 2023. So if we can get through this next couple of years, you think the markets will balance themselves out, reduce some of that debt, and make it less likely that we just got to keep producing oil even if prices go down?
I think it depends a lot on storage. If we increase storage, increase distribution pipelines, then I think oil could stay lower, because the cheap oil here gets to market a lot quicker. But if there's bottlenecks in producing that distribution system, then I think oil stays higher and the debt becomes a little bit less of an issue.
Who's more powerful, do you think, OPEC or the U.S. shale revolution? We're the biggest oil producer in the world now. But OPEC plus Russia is bigger than us.
So OPEC and Russia are 0-1. So they tried to bankrupt us in 14, 16. They really tried to bankrupt the fracking companies. Unfortunately, they just hurt themselves. They brought the oil down. The bad guys went BK, the ones with too much debt, and were taken over by private equity with a lot less debt. So they only succeeded really in lowering the price and taking out the more leveraged.
It's got to be the only story in history where private equity came in and lowered the debt levels.
Right.
I mean, I don't think that's, private equity is like REO Speedwagon, built on rock and roll. No, it's built on debt. The U.S. shale revolution, 12 million barrels a day is maybe where we're at the next time we get a number. How big do you think that this can be?
I think it continues to be huge. We're really constrained by distribution. We're constrained by a number of truck drivers. They can't find the workers.
And really. Sand and water. Right. And by the way, even diesel fuel. They need to run the generators, and they're running out of diesel to power the trucks to get the sand and water in.
Yeah, so there's much more supply there. There is the ability right now to extract that supply. So from an infrastructure standpoint, if we produce more infrastructure, distribution, pipelines, I think oil stays lower longer.